Scotty from Zenium Real Wealth, and right now we're joined with Jason Wolven and Karen Nielsen. G'day guys, how you going?
Good.
Good afternoon, Scotty.
All right, so what we're doing today is we're going to discuss the PIPA Annual Investor Sentiment Survey. So that's something that they do every 12 months. It's about the middle of the year, and then they compile all the info into this one easy to read document. So let's see if we can get this up on the screen here. Okay, so this survey this year was done with about 1,200 people. It's just under 1,200 that responded, and it gives them a bit of a snapshot. It's pretty much the only thing in Australia that is done this way, where it gives a complete snapshot each year of what people are thinking about when they're looking to do anything with property. Now, it does talk about investors. There was some homeowners and others that responded on the survey, and they allude to the results in that there. So we skip through here. We've got the introduction. It's lovely. So we'll go to the summary here, and we've got, we'll go through a couple of things, and I've taken some notes that I'll go through at the same time on this other screen. Okay, so some of the key takeaways is that in general, things were more positive than the same time last year, which I suppose makes a lot of sense. Are you guys finding anything different in your dealings with clients? I mean, everyone seems to be a little bit more positive.
Yeah, I think the election, getting that out of the way was the big key, wasn't it?
Well, it's pretty funny. Yeah, it's funny you say that, Jason, because it's the results of this survey said that 75% of investors took into account Labor's capital gains tax, their plans that they had for capital gains, and that affected their vote one way or the other in the election. So that's a pretty large number. So I think what you're saying there, yeah, smack on, mate. Now, look, you could read that depending on your bias and say, well, 75% of these people voted for Liberal, but it just says that it affected the question. I remember the question because I did the survey. It said, did it affect your voting in the election? Didn't actually say who you voted for. So it might be like, oh, we all wanted the capital gains changes. So who knows? But anyway, 75% is a large number for one policy to affect in this survey. The other thing that we're moving on to is that the ability to get finance was something that was featured pretty heavily in this survey this year. And there was a big number here, in my opinion it's a big number, is that 25% of respondents found themselves in a position where they were unable to refinance an amount that they were previously able to borrow. So this is this section down here. So that's an extraordinarily large number. So 1/4 of people who responded to this survey had found themselves where they couldn't refinance. Now that's large. I mean, you're not just going to extrapolate that out and go, right, well, 1/4 of property investors can't refinance. I think that's probably taking it a bit too far. But I think that that's something to very much keep in mind when you're reviewing the market. And it aligns with what we're finding with clients, and that they're definitely had to be a lot more specific on what they've needed to have in terms of the documentation. One thing that I will say is that this was done around the June-July period, and since that time, we've had the assessment rate changed by APRA and a few, 2 rate drops from the RBA. So there's a potential that has changed substantially, but still, nonetheless, in the year prior, 1/4 of people had trouble refinancing. That's a fair bit.
That's very significant for me, because I would think most people that have a bit of equity and have property would assume that they would be able to refinance whenever they can, whenever they want, unless, of course, their employment circumstances or something else has changed. But that would have come as a shock to that 25% of people, I would have thought.
Well, you know what, and especially because it's saying that that was on an amount that they were able to borrow previously. So it's
Mm.
like, oh, well, my loans come up for 400 grand interest only. I'm going to refinance it to another interest only or whatever. And they just can't do it. And I think you're bang on. That would be an absolute shock to the system if you're one of those 25%. So the top number here, we've seen an increase of, 5%. So we've gone up from 77 to 82% of investors believe that now is a good time to invest in residential property. So I don't know what I think about that. I think that's a really large number of the people surveyed. I just hope that they have a clue where to invest. I don't know. I don't know what I think about that number. I think that's large. I think that that this survey went out to PIPA's network, including our clients and our pages on Facebook and other bits and pieces. So let's hope that those 82% of investors are completely educated on where they're going to go. All right, let's have a look at the top here. We've got Brisbane stays in favour while Sydney is appeal is back on the rise. So we're looking at Brisbane is 44% of people take that as the state capital with a good investment opportunities. That's all right. So it's seen more positively than Melbourne or Sydney or Adelaide. So there you go. Brisbane is, it has been for the past couple of years. Right? I mean, we've seen that in what we do. We definitely get a lot of inquiry from interstate people that are wanting to look in the Brisbane market. So that's not particularly of a surprise to me. And because Brisbane didn't boom as much as Sydney and Melbourne, that it hasn't sort of come off as much, then of course it's going to be the place where people are looking, or there's those savvy 82% of people are looking anyway. Okay, so we go over here. Investors are still on the hunt for a better lending deal. So 27% said they would consider refinancing their loan for an interest rate difference of just 0.5%. Well, that's a quarter of people would refinance for 0.5%. I guess that could be that quarter that couldn't refinance. Who knows? So, all right, here's one that comes as absolutely no surprise to us as we look at markets and cycles and all that sort of stuff and how land captures the gains. Potential changes to state tenancy laws could see the rising costs passed on to tenants. So two-thirds said that if tenancy law changes increase holding costs, they'd consider passing on some of those expenses to the tenant. You definitely didn't need a survey to get that figure, I reckon. What do you guys think? I think that at the end of the day, user pays. And it's as simple as that, is that if there's a cost increase to a landlord, it's going to get passed on to the user. In this case, it's the tenant. And that's where the whole ability for the land to capture any gains and the cost to be funded along the way come into it.
It's an investment. It has to make money. If it starts losing it, then you need to, do something at the other end, which is charge more rent.
Well, that's a really good point, Karen. And I think the thing is that if everyone started doing that and then, we have to sell, well, then there'd be a market readjustment. So the market's going to take what the market can take in terms of those cost increases. But if those cost increases for rent coincide with value increases on the property, then those rental people are always going to be stuck in that rental cycle, so to speak, of not being able to fund because their rent's gone up, so now their serviceability's gone down, but so I've got to earn more money, but hang on, now my property that I was looking at's gone up in price. So it is this, you got to find some way to get off that train, I guess. So let's go over here. We'll look at some real details getting down to it. We've got, do you believe now is a good time to invest? We covered that, 82% yes, 12% unsure, 6% no. So only 6% were no, so there you go. This is a good one. Has concern about falling property prices caused you to put investment plans on hold? So 78%, it's almost 80% says no. Like that's an extraordinary large number. Like, I don't know where these people are coming from for this survey. Maybe it's accurate. Maybe I'm just completely cynical and take a negative view on the world. But to me, that's a really, really bullish number. To have 80% of people saying that my investment plans are on hold, which is okay if they've got a proper plan. It's not okay if they're just wanting to buy and they're just ready to buy. That's a bit of a different thing. So, all right, there's some other pretty pictures here. This is a good one. What type of property would you buy? 71% house, 6% townhouse villa, unit apartment, house and land package 3%, 7% unsure. All right, fair enough. So house and land package is only 3%. Yeah, it's interesting. There's a lot of house and land packages sold, and I guess there's a whole bunch more normal properties sold. So I guess that makes sense. So are you looking to purchase investment property in the next 6 to 12 months? It's 48 yes, no, unsure. There we go. Now this is a good one. I think I can get all one. Yep.
Just before you move on, Scott, is that a much bigger number than what you would have expected? 71% existing house? That's huge.
Yeah, it is, and that's where I've made notes on my article that's attached to this, going to be attached to this video, in that there's no other survey like this in Australia, and I don't think it's wrong. I think it's completely accurate and it's great, and we use it. But I do wonder if, because it's distributed through PIPA's network, and PIPA is all about education and all that sort of stuff, that they have a specific type of clientele that fill it out. Because in my dealings, I wouldn't say that, and we're pretty vanilla and broad. I wouldn't say that 71% of people would default to a house in our questions. I mean, if this is overall and not just investment, yes. But if it's investment, we see a lot of people interested in units and apartments. We don't even like that stuff.
Yeah.
We see a lot of people come to us for house and land packages, and some of them end up with house and land, and some of them end up with an existing house. And a lot more than 3% come to us talking about house and land packages.
Yeah.
So I think that you're right. That's a very interesting number, mate. And I think it could be weighted by, as I said, the clientele that fill this out.
Yeah.
All right, this one, property investors continue to seek long-term capital gains above all other drivers. So there you go. So this little picture is pretty cool. So we've got short-term price growth. So that's guys that are need some cash now, flipping over, whatever. Same sort of thing here, renovating for profit. So we've got 8% of investors are looking in that space. 67% is long-term capital growth. 4% is short-term cash flow, which I don't even know what short-term cash flow would look like. Like what, cash flow now and then in 18 months there's no cash flow? Long-term rental passive income, that's a pretty substantial number too, and I like that number. That's good. Short-term tax benefits, well, that's really good. I'm glad we only see 1% short-term tax benefits, because in my 15 years, I think I've had more than 1% of people come to me that want to buy a property because of the tax. So I'm glad that if that's the case, then that's the case. You guys got any thoughts on that?
Still very much a climate of buy something and just wait for it to gain value over the next 10, 20 years. So not being very active with things, but just sit there and hold it.
Well, they're obviously not acting on the Zenium impact investment strategy, are they, Cameron? I mean, they'd see that sort of, no, they'd be done in 12 months in and out, the way they go. So yeah, that's you're bang on. 67 or 2/3 of people are just buying for long term. So I mean, realistically, that's the set and forget, and that is a high number. And you are right. We definitely focus on something that is definitely more around that 8% mark of people that we really, or at least get these guys to think about having something other than a buy and hold or set and forget.
So you have to say a big percentage of those people is just out of ignorance, and they just leave it. They buy it, they leave it, they just sit on it and don't know any better in a lot of cases.
It could be, or it could be their plan to do that. But I think that's a whole bunch of, it's lazy money, isn't it? I mean, if we're just expecting the market to do our work, we'll go back there. If we're expecting the market to do our work, well then, that's okay. But I would also like to have some sort of control over what our values and cash flows are of our property, and the ability to change that in a positive way. So I think that long-term capital growth, it was probably the way the question was asked, but I think that's fairly indicative of the market, to be honest. That's probably pretty right. Out of all the answers I've seen, you definitely see 60-70% of people do long-term, 20% want passive income, and the balance is whatever. So, yeah. Actually, 67, 87. Oh, yeah. All right. Just checking. Okay, so the order of importance, why are you planning to invest in property? This is a bit of an emotive one. So financially better life, self-funded retiree, retire earlier, nest egg. So it's just the usual stuff, not really anything specific here. The one I really loved was the 1% who don't want to be a financial burden on the government when they retire. They're the true saints in our society, aren't they? Hey, that 1%. So that's true. There is the 1% is special. So there you go. This 1%, however, is almost like the opposite of those guys. It says the government hasn't got enough money to pay a reasonable pension to me in retirement. So they're like the negative 1% there that are balancing out the other positive, we love the government 1%. And this 2% here to become rich. So those are the guys that put on paper what everyone else is probably actually thinking. So there we go. All right, lending and the economy continues to concern investors. So there's two major things in this survey that come out that was a concern. That was the ability to lend and to get finance, and of course the overall Australian economic climate. So that was the two biggest things there, which realistically doesn't really come as a surprise. So if we'd seen something else in there, that probably would be a big surprise. But I think that whenever we talk to people, we're definitely seeing that, right? Can I get the money? Where's the future of lending going? As I said, not so much the last couple of months, that's changed a bit. But, definitely, what's the market doing? What's that cycles? Where are we at? What's the overall Australian economy? And that's the whole reason why we're doing Xenium, right? We educate all our clients on that stuff. So nothing really to see there. Okay. Investors are still on the hunt for a better lending deal. We kind of covered that earlier. I don't think there's anything major there other than this section here. So it talks about the main reason for choosing a non-major bank. So not one of the big fours, someone else. There's some big numbers here. Increased borrowing power. Okay, so a quarter. And almost a quarter was my broker recommended them. That's a pretty big number. Now, we're not going to get into do brokers earn more from those guys and other, we'll just say that was very nice of the broker to find a better deal. And 35% cheaper interest rate. So those are the big three there, the big three reasons why people were choosing a non-major bank lender. So the banks are in a bit of strife there because they got a quarter of the brokers recommending non-majors. They've got increased borrowing power and they've got cheaper interest rates. So that's a big chunk of the market that is looking for other options other than the big four. Bearing in mind, depending on what your non-majors are, they could be owned by a big four. So let's keep that into consideration. But in reality, if you're looking at either credit unions, your Bendigo banks, or your private, legitimate private money, that would be, your definite non-major aligned bank lender.
I guess every time interest rate dropped by the RBA, the four majors are always in the news as not passing on the full cut every single time. So it's not surprising to see the non-major banks getting a bit of boost up on the back of that, I would say.
Yeah, I agree, mate. I think that it's not surprising at all. And in the article that we've got on this, I've said that in the past the banks have been able to market their way out of these these events, whereas this was a pretty big one. They haven't really been as successful marketing their way out of this, and the mud has stuck a lot more in this time round. So
The Royal Commission wouldn't have helped either.
that's it. That was all part of it. Yeah.
Yeah.
Okay. Investors voted in force against the proposed changes. We kind of covered this. This is the big one here. Did the proposed changes to negative gearing affect who you decided to vote for in the election? 75% yes, 25% no. Really, that's an interestingly worded question, because you don't really know what that means. So either that 75% could be, yeah, that meant I voted Liberal, right? And that 25% was, well, I was already voting Liberal, so it didn't change how I was voting. Do you know what I mean? Like, it could be that 100% of people, or like, it's really hard. So I don't particularly love that question. I know that PIPA's using that question a lot, saying, oh, look, this is a big deal, and 75% of people have this, think about that when you're doing policies. It could be a lot higher, it could be a lot lower, because those decisions could already be made one way or the other. So anyway, that's my comment on that. All right, I think we're coming close to the end here. This is the one that I thought was real interesting, and we touched on a bit before, Jason. There was established houses remain the top investment choice, so 91% existing or established homes. I'm not particularly sure what the difference in their definition is between existing or established. I guess that could be a house and land package that is already built. It could be a unit that is done and not off the plan. I'm just guessing. Established is obviously something that has been around and got trees and whatever. So 4% new house and land, 1% off the plan units. Well, honestly, that's a figure that shouldn't be a surprise to us, and that's a figure I'd love to see. But I think in reality, they're still selling off the plan apartments and units, and there's a lot more than 1% of people are buying them. That's just my gut feel. We see it all the time, and it's not through us.
Yeah, I think you're right with what you said earlier. I think the results there are possibly a little bit skewed because of the type of investor that they're surveying.
Yeah.
But the overall sentiment's there.
Yeah, agreed. All right, so rent vesting and borderless investing. So this is a really good one. Borderless investing is popular, with 44% and 45% of investors looking to buy outside the state they live in. Okay. Well, I think that 100% of investors should look to buy outside the state they live in. At least look. How do you know you're getting the best investment for you unless you know what your options are? So I think that number should be 100%. So in my opinion, that's low. It doesn't mean that they have to buy interstate. It just means they should at least consider it as an option. So the other thing was too, is that 1/3 of first-time investors identified as rent vestors, okay? Which means that they've bought an investment property while renting elsewhere, and that could be sharing with your mates or still living at home or whatever. I think that's a fairly decent number. I think that this survey amount is probably too small of the number of people that you'd class as first home buyers to give an accurate indication. But I do know for a fact that from our inquiries coming through, that we just said we'd never dealt with first home owners for years. And now we have definitely in the past few years been dealing with first time buyers, we'll call them first time buyers, who aren't buying their own home, but who are buying an investment property instead. We've definitely seen that in our stats coming through for sure. Okay. All right, we've covered this. This is the state the map of Australia. We've got Brisbane 44%, Sydney, Melbourne, etc., all round down there. And this is probably not surprising, this figure down the bottom here. Where is the most appealing place to buy right now? And they've grouped it into sort of regions. So we've got regional markets, metropolitan markets, coastal locations, and mining towns. So 1% mining towns, 8% coastal locations, 73% metropolitan markets, and 15% regional markets. I would say, from my gut feel, that number would be bang on. What do you guys think?
Yeah, the regional, it's a bit higher than I probably would have thought it would have been.
I think we've got to remember that some
Or
areas are
regional.
pretty high in regional, Karen. Like you look at see some of those areas in New South Wales. I mean, I guess what's Newcastle, that'd be classed as regional. I mean, it's not metropolitan.
Yeah.
So I think if that in mind, I mean, you and I would think regional perhaps is, I don't know, yeah, whatever. But I think that if you take regional as anything other than those other three locations, yeah, I think that it's probably looking pretty right. 1% mining towns. Man, I can't remember the last time we were called up about a mining town. Can you? Have you guys had any inquiries on mining towns?
No, not at all.
No, I'd say it's been rounded up to 1%.
Yeah, I think you're onto something there, Jace. All right, so here we go. So property investors are highly sophisticated and overwhelmingly investing outside of self-managed super funds. Well, that's probably because it's been really hard to get financing in super funds. I mean, the lending choices keep dropping. So I think that's probably more a result of the market than a result of a mindset change. But let's see what else. Where do you plan to seek property investment advice from? 61% property investment advisor. That's fine. That's who you're listening to right now. Jump on to zenium.property for all your property investment advice. That's us. That's our plug. Buyer's agent, that's also us. So combined there, we're looking at 114% of people should talk to us. Jason, what do you think about that?
I think that's fantastic, and I'd urge them to pick up the phone now. 1300 66 7789.
There you go. So
That's the shameless plug.
that's it. Now look, let's go. Okay, that's cool. Buyer's agent and property investment advisor sit at the top. That's great. That's where we sit. Fantastic. But let's go down the list, right? So mortgage broker. Half the people are looking to get investment advice from their mortgage broker. Almost half are looking to get investment advice from their accountant. A quarter from a property educator or a coach. Yeah, I mean, if that property educator or coach is an accredited advisor, okay, that's cool. Over a quarter from their property manager. Jason, as someone who's worked in the property management industry, how do you feel about that?
I'm not sure what figure scares me the most. And no disrespect to mortgage brokers, but 52% mortgage brokers, over 45% accountant. That scares me, but not nearly as much as property manager, 28%, given that I have interviewed quite a few property managers in the past.
Yeah. What is sitting low here is financial planning. That's pretty low. It's a quarter. I mean, it's below property managers. That's pretty scary. Real estate sales agent. Well, that's 19% too high. And that's no disrespect to my real estate agent mates, but realistically, you can't take investment advice from someone who's selling you a product. So that should be zero. And family and friends, well, that should be zero too, because when you add that to the pub figure, which they haven't listed here, it really makes you cry. So, but yeah, so it's really, we want to sit in this top market. And look, if we can get mortgage brokers to align themselves with, guys like ourselves, the buyers agents, investment advisors, then I'm okay with that half the people going investment advice from mortgage broker if it's through a structured channel. But if it's just because your broker did their last loan with a guy who bought in, Timbuktu, and he did really well, so you should too, that's not so much of a good thing. But property managers, real estate agents, too many people, too many. All right, investors want to see greater professional standards. So this is one of the weighted questions probably for PIPA, considering they're all about education. So in general, do you think property investment property investors need more investment education about the risks, potential benefits, blah, blah. 88% said yes. I like that question because that question isn't related to the industry, it's related to the individual investor. So that is a personal question being answered, not like, oh yeah, I think the industry sucks and should be regulated, which could be the case. But my point is that's 88% of people that have said, yes, I need more education in my investing. That is a massive number. It's just huge. And I think that is a really big market there that we need to be aware of. The last question we're going to cover is, do you think any person providing information or advice on investing in property should at least have some form of blah, blah, education? 93% said yes. So 93% of respondents would like the person who's giving them information to have some formal property investment education or training. I think that's really good. And obviously that question is weighted towards PIPA, but I think that's still a pretty fair answer, and that's good. I'm glad we're able to live in that space.
I'm happy that the 11% that take advice from their friends and the 25% that take it from their property manager in that group, they realise it needs to be better.
Well, hopefully it was the last question. That's right. Before those other questions were already answered, they went, oh, gee, yeah, maybe. So yeah, let's hope that's the case. Look, we will put some links up on this video in regarding where to find this this survey, and also we've got our breakdown of our article attached to it. So we will do that and put that on there. Is there any closing comments that you guys want to make?
No, just make sure you're asking somebody who knows the answer. If it's not a financial planner or mortgage broker or your neighbour or the publican or anything like that.
Yeah, I think it's important to really suss out who you're dealing with and how long they've been around. Are they offering more than one product? Where do they get paid? All that sort of stuff. So I think that's really important. But all right, well, look, that's it from us today. This is our open boardroom discussion just as we come and discuss topics. Thanks for joining us if you've logged in and seen that. And if you're watching after the fact, click on some of the links below. It'll take you to our breakdown of this survey and our article related to that. All right, that's it from me. Scotty at Zenium Real Wealth. I'll see you later, Jason. See you, Karen.
See ya.
Bye-bye.
Bye.